Good afternoon. Call this subcommittee to order. Good afternoon, Senator Rounds. I want to thank you for working together with me on today's hearing, focusing on what we can do to improve access to housing in rural communities. I want to thank Chair Brown for his encouragement and support of our subcommittee work, and I want to thank Senator Shaheen from New Hampshire for joining us today as well. So small towns and rural places are creative, entrepreneurial, diverse, and wonderful places to live and to work and to raise a family. They produce our food and our energy. They are hubs of manufacturing and small business, education, healthcare, arts, and culture. And when I travel to rural communities in Minnesota, I find hardworking, passionate people who love their communities and want them to be even better. Yet we know that for many rural communities, the shortage of affordable housing is an enormous impediment to attracting new business, new residents, and new talent. The reality is, if you don't have a safe, affordable place to live, nothing else in your life works, or in your community, not your job, not your education, not your health. Housing challenges can be about families trying to find a place to live for disabled family members or seniors that are faced with living in overcrowded conditions. I mean, it could be workers who want to take a job in a grain elevator or a meat processor or a manufacturing facility, but the closest home they can find is 40 miles away. One hiring manager in Minnesota told me that they spend almost half their time just helping new employees find housing. And I know that Senator Rounds has heard similar stories in South Dakota. And I'm grateful to you for the work that we've been able to do in a bipartisan way on this subcommittee to look for solutions to some of these problems. The U.S. Department of Agriculture's Rural Housing Service, which Congress created in 1949, plays an important role in supporting the development of single and multifamily housing in small towns and rural places across the United States. RHS is a trusted and well-known partner for rural America, which faces unique challenges when it comes to developing and financing housing. This is our subcommittee's second hearing focused on rural housing. In May, we heard from Xochitl Torres Small, who's the Undersecretary for Rural Development. She runs the Rural Housing Service, and she shared several ideas for how to improve Rural Housing Services administrative systems to keep housing affordable for residents of Section 515 properties, as those properties, those USDA mortgages for those properties mature. Following the hearing, Senator Rounds and I made a public call for input on RHS programs, and we received nearly 24 responses. I appreciate so much the thoughtful comments, and we learned a lot from them. Nearly all of the letters we received pointed to the importance of fully funding the Rural Housing Service, and I certainly agree with that. Commenters also noted the importance of making administrative improvements, similar to what we heard from Secretary Torres Small. We also heard about the need to decouple rental assistance from Section 515 mortgages. As properties with these mortgages age and their mortgages mature, many low-income families are at risk of unaffordable rent increases. Senator Shaheen and I introduced a bill yesterday to fix this problem, and I appreciate your partnership on this issue. In addition, we heard about the unique challenges that Native communities face in obtaining mortgages, particularly on trust land. Senator Rounds and I have been working together on a bill to expand an innovative USDA pilot program to address this issue, and I look forward to hearing more from our witnesses about that today as well. Finally, we've received some very interesting suggestions for addressing other issues that exist, including how to update home repair programs, options to prevent foreclosures, which can both help keep residents in their homes and save the USDA money, and opportunities to reduce burdens and bureaucratic red tape on homeowners and renters, especially very low-income families. So I look forward to hearing from all of today's witnesses about these issues and more, and I hope that we can continue the productive conversations that we've had so far about how to address the housing challenges facing small towns and rural places. Senator Rounds, I recognize you for your opening remarks.
Thank you, Madam Chair. And once again, I want to thank you for the cooperative effort in which this subcommittee has continued the work. And I want to thank our witnesses, specifically Ms. Erickson, for joining us virtually from Sisseton, South Dakota, for offering your stakeholder feedback and how to improve the Rural Housing Service, or RHS. In South Dakota, RHS has played a large role in supporting affordable home ownership and rental housing for lower income families. I believe there are a number of ways that we can streamline and modernize RHS to more effectively serve rural Americans. Over the last several months, our offices have been collecting recommendations from stakeholders like those testifying today on ways to achieve this. Their proposals have included common sense reforms such as increasing the threshold for mortgage requirements on 504 loans, requiring USDA to provide more data transparency along with an annual report on RHS programs, improving staffing, updating old IT systems, and more. Over the last several decades, the number of loans made through the Section 502 Guaranteed Loan Program has increased, while the number of loans made through the Section 502 Direct Loan Program has declined. The Direct Loan Program, a more expensive program that exposes taxpayers to greater risk, was failing to reach communities, more specifically members of tribal communities, in a meaningful way. In order to better serve Native American communities, USDA launched a 502 lending pilot program in 2018, where USDA partnered with Native Community Development Financial Institutions to help Native American families realize that dream of home ownership. I look forward to hearing Ms. Erickson discuss the successes of that pilot program in South Dakota. Although the pilot program was successful, it has not yet been expanded. The results of a 2022 National Rural Housing Coalition survey of organizations working with RHS on administering the 502 Direct program demonstrates how broken the program remains. The survey found that there was a wide variation of how Section 502 loans were administered, there was inconsistent staffing of loan applications, and loan processing was often delayed, sometimes stretching to 70 days or longer. That's why as we look to make updates to RHS, I think it is important to include the bill Chairwoman Smith and I have partnered on to expand the 502 lending pilot program. We should be promoting innovative strategies like this that utilize public-private partnerships to make certain funds reach the communities that really do need them. We will also be looking at ways to streamline regulatory requirements for programs and increase flexibility for the smallest communities, as cumbersome processes have deterred nonprofits from utilizing programs. In that vein, staffing and IT upgrades are imperative as we evaluate how to make RHS as effective as possible. RHS is using software that, in some cases, is nearly 25 years old. The outdated technology can delay applications from prospective renters and buyers and scare away prospective landlords that are interested in utilizing RHS programs for their properties. As a USDA lender, I'm interested in hearing Mr. Battany's perspective on ways to upgrade processes. Thank you again to all of our witnesses for being here today, and I look forward to the conversation. Thank you, Madam Chair.
Thank you, Senator Rounds. And now I'd like to invite Senator Shaheen who's visiting our committee this afternoon, to make a few comments. Thank you.
Well, thank you very much, Chair Smith, Ranking Member Rounds, and Senator Tester for all of the work that you've been doing to address rural housing, and also for giving me the opportunity to be here this afternoon to talk about some of the challenges we're facing with respect to housing in rural areas in New Hampshire, and also the legislation that Senator Smith already referenced to address some of those issues. Right now, New Hampshire, like I'm sure many parts of the country, is in the midst of an affordable housing crisis. According to the 2022 Residential Rental Cost Survey, which was conducted in New Hampshire by the New Hampshire Housing Finance Authority, the vacancy rate for all rentals in New Hampshire is just 0.5%. That's not 5%, that is 0.5%. That's compared to a vacancy rate in the Northeast of 4.9% and nationally of 5.8%. And meanwhile, rents across our state continue to increase at an alarming rate. The cost for a two-bedroom unit has increased almost 26% in the past 5 years. Now, this is a statewide crisis, but in some of our rural areas, the problem is even worse. In Grafton County, which is in the western part of New Hampshire along the Connecticut River and borders Vermont, The vacancy rate is just 0.3%, and rents have increased an astonishing 48% over the past 5 years. Now, in many of our rural communities, as you all know, USDA rural housing service programs remain a critical source of affordable housing for our lowest income and most vulnerable residents. Many of them are elderly or disabled, but some of these programs are showing signs of strain as they mature. The Section 515 loan program, which was originally established almost 60 years ago, is one of those programs that requires attention today to ensure that it can be successful into the future. Under current market conditions in many communities, when a Section 515 loan matures, there are very strong incentives for the property owner simply to leave the program altogether and convert the units to market rate. In fact, we've had 2 properties in the Lakes region of New Hampshire, which is more in the eastern part of our state, which were recently saved from this very fate, including one complex that sits on Lake Winnipesaukee, our state's largest lake, which could easily have been converted to luxury apartments, which would command very high rents. It was only through the timely intervention of Lakes Region Community Developers, which is a mission-driven nonprofit, that this outcome was avoided and tenants' homes were preserved. But unfortunately, the residents of many other properties in New Hampshire and across rural America are not so lucky. Legislation I introduced last week with Chair Smith, the Strategy and Investment in Rural Housing Preservation Act, is designed to address some of these incentives, tilting them back in favor of preserving vital, affordable rural housing stock and protecting low-income residents from displacement. To do so, the bill gives USDA and property owners flexibility to restructure existing Section 515 loans to ensure that these properties remain affordable for years to come. Even where restructuring is not possible, the bill helps protect residents by allowing rental assistance to be decoupled, as Senator Smith alluded to earlier, from the underlying loan, but to remain in place at the property, or by allowing the resident to transfer their rental assistance to another eligible property. Finally, the bill requires USDA to establish a plan for preserving affordable rental housing in rural areas in consultation with an advisory committee composed of a variety of interested stakeholders that includes tenants and property owners. The affordable housing crisis in our rural communities is an enormous challenge that no single piece of legislation or single action is going to be able to solve. But I believe this legislation, like so many of the other initiatives that this subcommittee is working on, is an important step that will help prevent immediate harm by preserving existing affordable units as we all consider additional measures to create more affordable housing in communities where it's needed most. Thank you again, Chair Smith, Ranking Member Rounds, and all members of the subcommittee, Senator Tester, for letting me join you today and for the work that you're doing. And I stand ready to be helpful in any way I can as you bring forward legislation.
Thank you, Senator Shaheen. I now want to welcome our witnesses here today, and I will turn to Senator Rounds to introduce Marcia Erickson from South Dakota.
Thank you, Madam Chair, and it is my pleasure to introduce Marcia Erickson, the CEO of Grow South Dakota. Marcia has been with Grow South Dakota for more than 30 years and has served as CEO for 17 years. Grow South Dakota is a statewide nonprofit organization located in Sisseton, South Dakota that provides programs and loan products to advance housing, community, and economic development. She is also the president of the board of directors for the National Neighbor Works Association. Marcia has a broad range of experience in mobilizing and administering resources from private, state, and government funding sources. As a loan packager for the USDA Rural Development 502 Direct Loan Program, Marcia is well situated to give useful feedback to the subcommittee on ways to improve RHS programs. Thank you again, Marcia, for joining us virtually and for being willing to represent the interests of South Dakotans in Washington.
Thank you so much, and welcome, Ms. Erickson. I would turn now to Senator Tester to introduce Tanya Plummer.
Yeah, thank you, Chair Smith and Ranking Member Rounds for holding this hearing. And Senator Rounds, you know that you're number one in 17 Select. And if
I
you
was going to say that, but I didn't know if you wanted me to break that news.
no, and if you guys wonder what we're talking about, you need to go to Nats Park, and I'll give you a hint. It has to do with good beer and good fun. I have the distinct pleasure to introduce Tanya Plummer, who is the Director of Native American Housing Programs at the Enterprise Community Partners, where she works with folks from across the country to build capacity and to improve Native housing. She also serves on the Montana Board of Housing. Tanya is an enrolled member of the Assiniboine Sioux and Cree Heritage. Tanya has previously led a Native CDFI based on Fort Belknap Indian Reservation, where she has deep ties. During her time there, she helped grow the National CDFI network and foster Montana Native home ownership opportunities. We are glad to have you here today, Tanya, and we look forward to this hearing. Madam Chair.
Thank you, Senator Tester, and welcome, Ms. Plummer. I'd like to introduce Elizabeth Glidden, who is the Deputy Executive Director of the Minnesota Housing Partnership. As Deputy Executive Director, Elizabeth manages the Minnesota Housing Partnership policy and program initiatives with a focus on expanding housing and community development opportunities for historically underserved communities. I have to say, as a personal note, it's wonderful to welcome Ms. Glidden. She and I have known each other since our days working together in city government in the city of Minneapolis when I was chief of staff for the mayor, and she was served and was a leader on the city council, including on housing issues then. I'd like to welcome David Battany to the committee, who is the Executive Vice President for Capital Markets at Guild Mortgage Company. Mr. Battany has more than 30 years of leadership experience in single-family lending and is responsible for all of Guild Mortgage's government agency lending, including USDA's rural housing service loans. Mr. Battany serves as a member of the Mortgage Bankers Association's Residential Board of Governors and co-chairs the Mortgage Bankers Association's Affordable Homeownership Advisory Council. And he is co-chair of the National Housing Conference 2022 Black Homeownership Collaborative and is a board member of Habitat for Humanity. And I also learned from reading David that he hails from far western Colorado, so issues of rural communities are near and dear to his heart. With that, I just have a few reminders. This hearing is in hybrid format. Our members may be both in person and remote, as well as having witnesses testify as we do today, both in person and by video. If there is any technology issues, we will move to the next witness until it is resolved. For witnesses, you all have 5 minutes for your opening statements. Each of you will have a clock in front of you or on your screen. Your full written statement will also be part of the record. For Ms. Erickson, who's joining virtually, you will hear a bell ring when you have 30 seconds remaining, and then again when your time has expired. Ms. Glidden, I recognize you for your opening statement.
Thank you, Chairwoman Smith and members of the subcommittee. My name is Elizabeth Glidden, and I am the Deputy Executive Director of the Minnesota Housing Partnership, a nonprofit organization that advocates for equitable housing policy, produces data-informed research, and delivers community development services across the United States. We specialize in serving rural communities and Native nations, and in the past year alone, we have provided direct technical assistance to 36 rural communities, including 14 Native nations. So what does housing affordability crisis look like for rural communities? Rural residents have fewer housing options and are more likely to live in substandard housing than their urban peers due to older housing stock and less compliance and enforcement of codes. In Minnesota, 41% of rural renters are cost burdened, meaning they are paying more than 30% of their income for housing. To serve the housing affordability needs of rural residents, Minnesota has been an early and enthusiastic adopter of USDA's Section 515 program. In Minnesota, Section 515 homes make up almost 20% of all subsidized housing units in rural areas of Minnesota. That percentage is much higher in some areas of the state, where 515 units can make up more than 45% of available affordable homes. This means that a Section 515 property may provide the only affordable housing option within a community or for many miles around. The average income of Minnesota's Section 515 residents utilizing rental assistance is less than $12,000. This means that these very deeply affordable properties are critical in rural communities. A long-time concern has been mortgage maturations of 515 properties, as we still do not have a preservation or replacement strategy for these rural homes. The peak of mortgage maturations for Section 515 properties in the Midwest states is 2030, about 10 years before the peak occurs in other areas of the United States. And according to the Housing Assistance Council, Minnesota actually leads the nation in the number of properties that are exiting the 515 program. In the past 5 years, about 1,100 units, representing more than a tenth of all 515 properties in Minnesota, have exited. In addition to mortgage maturations, the reasons for these exits include owners prepaying their mortgages, owners selling outside of the USDA transfer process to avoid it, and deteriorating property conditions. As 515 properties often are coupled with Section 521 rental assistance, this helps ensure that these homes are affordable to our lowest income rural residents. And as was mentioned in other opening comments, under current law, when a USDA mortgage is paid off, the 515 or the 514 or 516 property loses its 521 rental assistance, which can result in displacement, housing instability, and loss of community for those residents, but also a property may face negative financial consequences from the loss of rental assistance. Decoupling the mortgage from rental assistance can support continued housing stability for rural residents, that if by allowing the rental assistance to continue at a property that no longer has a qualifying mortgage. And in states like Minnesota, with increasing mortgage maturations and other exits, this is an option that needs serious consideration. We agree with our colleagues at the National Rural Housing Coalition and the Housing Assistance Council that decoupling should be paired with increased funding for USDA's rural housing service programs, such as the Multifamily Preservation and Revitalization Program, and that implementation conditions must be included with any program change. We support the conditions that are set forth in the Shaheen-Smith bill as providing appropriate conditions for decoupling, among other supports for rural housing. In addition, I would like to mention that we have policy recommendations that include funding necessary for preservation and program operations for USDA's programs, that transfers to mission-focused nonprofits must continue to be incentivized, including with technical assistance, and that 521 rental assistance provided in the American Rescue Plan should receive serious consideration for extension. Thank you so much to the subcommittee for allowing me time to speak. I look forward to any comments and questions.
Thank you very much. We'll now turn to Ms. Erickson, who's joining us virtually for your testimony.
Thank you, Chairwoman Smith, Ranking Member Rounds, and members of the subcommittee. As the CEO of Grow South Dakota, the housing programs offered by USDA have been extremely important to the work that we do in the communities that we serve. The perspectives that I share with the committee today are both some of those benefits and some of the challenges of these programs. The 502 Direct Loan Program is a great resource and an option for an affordable housing. This program assists low-income applicants to obtain housing by providing payment assistance. However, the length of time for approval on the 502 direct home loans can be discouraging to home buyers. A shortened application process, staffing levels sufficient to address the need, and upgraded technology for loan processing would greatly improve the 502 direct loan program. The Native American Rural Homeownership Improvement Act, introduced by Senator Smith and Senator Rounds, expands an existing USDA 502 direct loan relending program to partner with Native community development financial institutions. These Native CDFIs work daily in their communities and have the background and the experience that is needed to close those first mortgage loans for Native home borrowers. This is a prime example of a program that works. It should be replicated and it should be permanently authorized. Grow South Dakota supports this bipartisan legislation. In many of our rural communities, the Section 515 multifamily program does provide the only decent and affordable rental housing in the community. Over the last few years, with the transition to a more regional approach for the USDA offices, the response times have become delayed. The servicing agents are overloaded and unable to respond in a timely manner. We support increased staffing resources to enhance the efficiency and the effectiveness of the 515 multifamily program. The USDA 504 program provides direct loans and grants to low-income applicants to repair their homes. Grow South Dakota supports increasing the total funds that can be awarded to households, expand the eligibility to grant recipients, and raise the average median income limits. With broader eligibility and higher awards per household, rural residents will have better access to funds needed to repair their substandard homes. The Rural Community Development Initiative helps nonprofits to further their community development work. Grow South Dakota recommends an amendment to the grant scoring on the median household income for the communities where the recipients are physically located. Many times, the recipients are physically located in an area where the median household income levels are higher than what's allowed for the maximum scoring. But yet they're serving communities that are less than 70% of the state and national median income. This regulation change would better reach all low-income communities. We also support increased funding for the RCDI. In another area, mortgage lending on tribal trust land is a challenge in part caused by the delays in processing of title and mortgage-related documents by the Department of Interior, Bureau of Indian Affairs. The BIA must review and process the mortgage before it can be finalized. The consequences of these delays have resulted in financial institutions exiting this market, loss of capital flowing into tribal communities, and tribal populations not being able to access affordable mortgage products. The Tribal Trust Land Homeownership Act is important for Native Americans to have access to home and business loans. Thank you, Senator Smith, Rounds, Tester, and Thune for introducing this very important legislation. In closing, I applaud the efforts being made by Congress to increase the resources to USDA RHS and to ensure that programs are structured so that recipients can use them flexibly to meet our local needs. Thank you for working to create solutions in a bipartisan manner and for your time today. I look forward to answering questions you may have.
Thank you very much. I will now invite Ms. Plummer to provide your opening remarks.
Thank you, Chair Smith, Ranking Member Rounds, and members of the committee. Thank you for the opportunity to share perspectives on USDA's rural housing services with you today, and thank you, Senator Tester, for the introduction. My name is Tanya Plummer. I'm the Director of Native American Housing Programs for Enterprise Community Partners, where we work to make home and community a place of pride, power, and belonging for tribes all across the country. My career has focused on housing and homeownership because I have experienced in a deeply personal way its role in providing stability, security, and the ability to rise above circumstances. My grandmother was born in a teepee on the banks of Enemy Swim in Sisseton, South Dakota. My grandfather was born in a tent on the Missouri River just outside the Fort Belknap Reservation of Montana. Neither ever owned a home. From them came my father, born on the Fort Belknap Reservation, who built his home on trust lands over several years with cash, going years without running water until he could afford that amenity. I was 20 years old when NAHASDA was first authorized, and 2 years later, I became the first homeowner in my family. I purchased my first home in Montana with a USDA rural housing loan. I've spent my career helping others create a home, and in bringing this experience to elevate opportunities for tribes, I am severely disheartened at the lack of products and resources for Indian country. In advance of my recommendations, I do want to acknowledge the recent positive outreach and efforts of USDA rural housing staff to tackle the tough issues for mortgage banking, mortgage lending in Indian country, and to be present and available thought partners. I also want to acknowledge the complexities of applying broad changes to all rural and tribal areas where the markets, courts, rates of growth, and ecosystems of support are unique and varied. It is critically important to be cognizant of this in drafting legislation and careful of unintended consequences. We are very pleased to see the committee's interest in supporting the USDA's Rural Housing Service. Our submitted written testimony is much more robust, and in it we offer specific solutions and recommendations toward progress. But to summarize today's focus, we'll touch on 3 proposed areas of reform needed to improve the accessibility and effectiveness of RHS programs, including, number 1, increased rural housing resources and technology. RHS programs are extremely valuable but underutilized due to limited staff and technology, and that disparity negatively impacts rural and Native Americans who rely on them as some of the best and only products designed for rural and Native needs. We encourage creative solutions, such as the national expansion of the Section 502 direct relending pilot, so successful in South Dakota, of whom my partners are here behind me supporting, that leans into Native CDFIs as natural partners in the deployment of USDA funds, and also the renewal of appropriations to Section 525 technical and supervisory assistance, or TSA, grants. Number 2, the USDA Section 502 subsidy recapture is damaging in Native communities and should never be expected on tribal trust lands. Tribal members on trust lands already come to the closing table with less equity because their land is given no value, and the application of a subsidy recapture assures that they will never build it at a rate comparable to non-tribal members on fee simple lands where a buy-sell market exists. Recently, in one tribal community, a father with a 502 direct loan passed away, and in order to keep the family housed in the home, they had to come up with $22,000 of subsidy recapture. However, broadly removing the recapture in communities where value appreciation is seen and a shared equity model makes sense could harm the USDA budget formulas and potentially decrease dollars available for Section 502 lending. A nuanced approach we feel is needed, and the subsidy recapture should be treated one way on tribal land, one way in appreciating markets, and another way in depreciating markets. The proposed application, number 3, of federal foreclosure proceedings currently available to HUD but not to USDA on Section 515 multifamily preservation products is to be addressed. While we appreciate the need to streamline recovery and especially to ensure long-term affordability, we recognize the tribal courts and jurisdictions are sovereign and that tribal sovereignty must be recognized. There is a fear and frustration around the way these proceedings play out on tribal lands, and we encourage further, deeper consultation with NAIHC, with the policy committees of the Native coalitions in Minnesota, South Dakota, and Montana, and others to determine viable solutions to expedite the process while respecting tribal sovereignty. In conclusion, I thank you for inviting me to share my experiences and perspectives today. On behalf of Enterprise Community Partners, I'd like to thank the committee, especially Chair Smith and Ranking Member Rounds, for their leadership on rural and tribal housing issues, as well as the bipartisan cooperation on issues that affect so many Americans in every corner of our country. We look forward to continuing in partnership with you.
Thank you so much for your testimony. Now turn to Mr. Battany.
Chair Smith, Ranking Member Rounds, Senator Tester, thank you for the privilege to testify on behalf of the Mortgage Bankers Association. Lenders are indispensable partners to USDA's Rural Housing Service, as we are both the providers and the servicers of these loans. These programs are worthy of our nation's commitment to them. In 2021, there were 114,000 mortgage loans backed by USDA. This represented less than half of 1% of all total loan volume. The average loan size was $180,000. The total amount of Section 502 guaranteed loans obligated for Minnesota was $448 million and $170 million for South Dakota. It is imperative to be mindful of the small market share and smaller loan size when discussing proposals that might further restrict lending or impose additional costs on service delivery. The focus of my testimony is the opportunity to build on recent progress that RHS lending can better serve consumers and industry participants alike. We can advance this objective by addressing 3 areas: better workflow, better technology, and if these 2 areas are achieved, better loan products. I would like to start my discussion of better workflow by commending RHS on its recently proposed rule to implement a provision of HOTMA enacted in 2016 to enable the Secretary to delegate approval authority to preferred lenders. Lack of any delegation authority is a major barrier and has kept RHS out of alignment with FHA and VA lending. In some cases, response times from RHS to approve a loan can take up to 10 days, and this may result in some borrowers delaying or losing their closing date. For financing multifamily properties, delays can be a deal killer. Buildings for rural workforce housing require a combination of debt, tax credits, and equity financing that must come together quickly or they'll be applied to other deals. USDA should proceed with updates that provide full delegation to all approved lenders to be responsive to their customers' needs for both residential and multifamily lending. The technology backbone of RHS operations is widely acknowledged as outdated. It is less advanced than those used by several other government housing agencies, Fannie Mae and Freddie Mac, and lenders. USDA should have the budget to ensure RHS can keep pace with changes in the market, evolving data security threats, and changes in the ways which mortgage loans are originated and serviced. The technology focus for RHS is centered on its Guaranteed Underwriting System, GUS. Further work is needed to ensure the system fully supports RHS borrowers and lenders. For example, RHS imposes limits on the number of runs a lender can make for each borrower, making it difficult for a lender to perform pre-qualifications. RHS offerings need to be more attractive for loan officers working on the ground with consumers. When a problem occurs with a system, it often requires substantial manual intervention. RHS should also update its interfaces for the remittance of annual fees. Today, servicers must manually review and submit payments, which is cumbersome and outdated. Once capacity is improved, various RHS loan parameters should be reviewed to ensure they don't restrict access to credit or responsible use of RHS offerings. The RHS debt-to-income limits, for example, are far more stringent than those associated with other types of government lending. RHS requirements related to borrower reserves, borrower deposits, existing trade lines, qualifying income, and tax transcript history would benefit from sensible updates as well. Congress and USDA could examine limits on the program's population size and geographic parameters. Finally, RHS can expand pilot projects and finance a broader variety of housing types to match GSE standards, include manufactured housing and accessory dwelling units. RHS financing will increase affordable housing options in rural areas. The subcommittee should review the lien payment required under the direct loan program and work to ensure that federal funds are provided in a timely manner to serve borrowers throughout the entire year. Once again, on behalf of all MBM members, I appreciate the opportunity to testify, and I also deeply appreciate USDA's ongoing engagement with lenders and other stakeholders. I look forward to your questions.
Thank you so much. We are now going to turn to members of the committee for questions. Each member has 5 minutes, and I am going to defer to Senator Tester.
Well, thank you, Madam Chair, and I want to thank all the folks who have testified today. I appreciate your testimony. Several of you mentioned that the USDA RHS program were valuable, but they're underutilized because of limited staff and technology. That disparity negatively impacts rural and Native communities who rely on this program resources as some of the best and some of the only products designed for rural and Native needs. So I will ask you, Tanya, and anybody else can jump in after Tanya is done, is are there creative solutions to explore here other than more staff, more technology, which is huge? Are there any other changes to the programs that you see obvious?
Thank you for the question, Senator. Two creative ways that we saw to expand the staffing shortages that are at USDA. I think portions of USDA staff in South Dakota are functioning at 25% of what they were 5 years ago, but that was really fixed by the 502.
Say that again. Did you say that the staffing today is 25% of what it was 5 years ago?
Correct.
Okay. So why is that?
I believe it's because of an underfunding of the USDA rural housing programs, and
Okay.
That's a much more layered issue to.
No. I just wonder if that's a choice that Congress made or if it's a choice the agency made. That'd be interesting to find that out. Keep going. Thanks for pointing that out.
We've experienced the same issues in Montana. I think we have partners at the table in Montana who very much want to come alongside and do better and just do not have the staff. So as an executive director of a CDFI, to run deals and scenarios, all I could get was an email of the handbook. Not for lack of desire or want, it's just nobody's done those programs. Nobody knows how to do them in Indian country, and there's nobody to really figure out how to facilitate it. So we would really encourage leaning into the national expansion of Senate Bill 2092, because the Native CDFIs on the ground are networked through the Native CDFI network. They're networked through strong and growing coalitions in South Dakota, Montana, New Mexico, Minnesota. There's strength in those numbers there. They have peer-to-peer learning models where they can lean into each other for best practices, especially when it comes to using outdated technology like the GUS system. That's a beast to work with. And as an underwriter, I struggled with that system as well.
Okay. Anybody else like to respond to that question? Go ahead.
Thank you, Senator. Minnesota Housing Partnership is one of a small number of organizations that's provided technical assistance through the Multifamily Preservation Technical Assistance Program. And while I do not think that that is a full solution to the depth of issues with staffing and technology, it is very important program, not only for 515s, but for others as well. So permanently authorizing the MFTA program and increasing those resources could be important. A second issue I wanted to mention was simplifying processes. In the 515 area, I would recommend simplifying the transfer process by instituting a two-step transfer, and I can go into that more if desired.
Okay. I have a question for Mr. Battany. You talked about RHS's closing response can take up to 10 days. What's the standard?
For most lenders, they are delegated for most products like FHA, VA, Fannie Mae, and Freddie Mac products. So the USDA's requirement that they review the loan to make the conditional commitment is somewhat unique. There are some private investors that require that, but it's not common for Fannie Mae, Freddie Mac, FHA, and VA loans. So the process, depending on weekends and timing and staff shortages, can be 1 day, 2 days, and sometimes 10 days. So the problem is if there's ever a government shutdown or anything that could delay humans' ability to respond, it does slow the process down.
Okay. Could you, and I'll say this, Tanya, because you brought it up, it was a thing called a subsidy recapture. Tell me when that's used or why that's used, either one. Or you can do it, Mr. Battany, I don't care, just as long as I get an answer.
The idea is really centered around the concept of shared equity and sort of increasing the affordability of the home and the entry point. And so by applying the subsidy early on in the loan process, the rate is drawn down to somewhere around 1-2% in order to increase the affordability of the home. But that's not a permanent benefit because it has to be repaid back in the event that the homeowner sells the home or passes away, or it ends ownership in their hands.
I got you.
But I know one of the pilot CDFIs that are part of the National Relending Plan, they don't even use it because it's just felt as a bitter sting and a bite. It doesn't work in those communities. It discourages the resale of that home.
Gotcha. Okay. Thank you, Madam Chair. Thank you. Thank you all.
Thank you, Senator Tester. Senator Rounds.
Thank you, Madam Chair. First, thank you, all of you, for the information that you're providing to us. And this has been very helpful already just in your opening testimonies. As a rural stakeholder who helps build or who helps administer USDA programs, I know that you've experienced the burdensome process and the lack of flexibility that comes with that. You've expressed that. Ms. Erickson, I'd like to address this question to you. How would you like to see USDA increase flexibility for our smallest communities in South Dakota to promote uptake of the USDA RHS programs?
Well, there's a variety of things that can be done to increase the flexibility. There's so many intricacies, like for loan packaging, for instance, that you mentioned. It's difficult for the packagers to get to the end product. Small credit issues, self-employment, everything like takes extra time, but the technology to support that would be one step, as we've already discussed, and the staffing resources. Another thing that we're up against a lot of times is just communication. There's been lack of responsiveness from the USDA Loan Servicing Center, which could be improved. We've shared loans with rural development that have been foreclosed, and they may sit empty for a length of time before they're made available for resale. And part of that is due to being able to effectively communicate with them. I think if those communication lines were improved, we could be more efficient and possibly help some of those home buyers through our HUD counselors with financial education and budgeting, or maybe even provide assistance to help bring their loans current. There's other flexibility areas like the 504 loan and grant program. We often refer our seniors to the grant program, and it can be coupled with a loan. And our seniors that are low income are very cautious about taking out a loan. And I can understand that. When we were doing home improvement on a house, a lady was making lunch, and I said, "Oh, how nice. I'm sorry to interrupt your lunch. Do you ever go up for senior meals?" And she said, "They're too expensive." So when I went back to look at her income, it just was Social Security income. And she was trying to keep up her house with Social Security income and pay for utilities and medicine and food. Very, very hard. And they're afraid to take out that loan portion. So increase that grant portion would be one recommendation that I would have. And greater flexibility, working with both focus groups in our communities would be a great start also.
Thank you. Mr. Battany, as a USDA lender, you are instrumental in getting money into the hands of rural Americans, and you have seen the inefficiencies of RHS firsthand. Could you detail for the subcommittee the single most important update you'd like to see?
My view is the single most important update would be to increase funding, which would allow RHS to make more investments in technology. And much of USDA staff perform functions that are very manual in nature in response to the inefficiencies of the current system. So the investments in the technology would free up staff to be more available to provide better communications and service. So I would suggest that the investment or the increased investment in RHS funding for the technology would also pay the dividend of improving communications and helping create better awareness of the programs and the functions and requirements of each program to reduce confusion and to create more certainty with mortgage lenders and with consumers.
Thank you. Ms. Plummer, the 502 relending pilot program has been extremely successful in South Dakota, and you've made note of it earlier. Currently, our native CDFIs even have waiting lists for individuals wanting to participate in the program. How would legislation like the Native American Rural Home Ownership Improvement Act make an impact in states like Montana?
I think between the tribal communities there, I think the pipeline was, I can't remember how much, it's immense. And I believe there would be immediate access to home ownership in those tribal communities. We have been working hard to build a Montana Native Homeownership Coalition, patterned similarly after South Dakota, to increase capacity among all those CDFIs, to have the systems in place, the training in place to immediately deploy USDA funds as a part of that pilot if it were to be passed. So the impact would be very real and immediate.
It's really a matter of the CDFIs actually understanding how to work in Indian country and on reservations and with tribal trust land, isn't it? It's a matter of understanding the current regional situation.
They already know their communities. Native CDFIs are so close to the problem. They're good at building the social and emotional infrastructure. They're good counselors. Many times they understand the complicated land processes that USDA staff just stumble over and are intimidated by. And so I think the education is actually the other way around, with USDA staff having a chance to understand how Native communities think, live, breathe, and how to work within those land systems.
Thank you. Thank you, Madam Chair.
Thank you, Senator Rounds. So in 1963, over 16,000 rural rental properties, translating to well over 500,000 affordable units, have been financed through the Rural Housing Services 515 program. In Minnesota, there are currently about 450 properties, as I understand it, with Section 515 mortgages. Residents in these properties are making somewhere in the neighborhood of $17,000 a year. And these households are more likely to be headed by a woman or more likely to be headed by a person of color. And we know that even more properties, we're going to see properties leaving this portfolio soon. Big impact in Minnesota because we've been a strong adopter of this program, but all over the country. So when properties exit the 515 program, they may lose rental assistance funding. Some properties are no longer required to keep rental assistance affordable, and that means those residents are kind of, up a tree. Ms. Glidden, let me just ask you, so what happens to a tenant if they are living in a property where that mortgage expires?
When the mortgage expires, if that property has 521 rental assistance, then that rental assistance also goes away from the property. Knowing what happens to the tenants is something that we've been trying to dig into more deeply. This is also part of our analysis that looked at what are other housing affordable properties in the areas, and what we find is that there, frankly, are very few, if any, opportunities in many communities in Minnesota for residents to stay within community once those rents increase and once the mortgage expires. And so those residents are left without a home and without the community.
Yeah. They have to leave. Everything is up in the air. And as we know, there's such a shortage of affordable housing in rural communities. It's not surprising that some of those residences end up living in their cars or living with family. I mean, it's very, very, very disruptive. So let me just ask all of the panelists, we think about the large number of 515 properties leaving the program as their mortgages mature. What are your best recommendations for how we should be addressing this challenge? I just opened that question up to everybody.
I will maybe start off. So I had talked a little bit earlier in response to a question about technical assistance. The reason I mentioned this is that right now, while there's a declining interest in 515 properties from private owners and investors, it is mission-driven owners that are maintaining strong interest in 515s, community-based owners. And so we think that we need to do all we can to assist those mission-based owners, those nonprofits and housing authorities, in being able to access those properties and maintain them as affordable. So technical assistance is one way to assist those very small organizations in being able to understand the 515 transfer process, being able to apply it, being able to manage through that system. A second item that I had mentioned was simplifying the transfer process. Mm-hmm. Right now, even if you are completely committed to trying your best, you have no profit motivation to maintain that property as affordable, the transfer process is a tremendous barrier. And I know that USDA is open to a two-step transfer process. This would be one idea for streamlining the transfer process, where you would be able to have a nonprofit owner close on the property, mm-hmm. and then have a second step where they would be able to develop a rehab plan and secure the funding that is necessary to ensure that property is in the proper condition.
And because I'm sorry to interrupt, but that gets at the issue that many of these properties are in dire need of being refurbished and repaired and improved so that they are decent places for people to live. Is that correct?
Absolutely. So many, if not almost all of these properties will need rehab, will need that assistance, which means a need to be able to secure the funding
Right.
to be able to assist those properties.
If it was easier to roll over the mortgage for that property, refinance it in some ways, you could use that as a source of funding for refurbishing the property?
Yes, but part of another issue is that some of the resources that we need to continue to assist with these restructurings, the NPR program, are not funded to a level that we're able to assist new properties. Right now, they are still running through a backlog, assisting those properties. And so right in this moment where we need to be helping and assisting mission-driven owners to be able to secure ongoing affordability of properties, we don't have the resources and we don't have the policy in place to help that take place.
Yeah. Thank you very much. Senator Moran.
Chairwoman, thank you. Thank you and Senator Rounds for hosting this hearing. And I thank the panelists for being here. I'm sure I'm stating something that's obvious, but there is no conversation in a community that doesn't occur about housing for maybe takes 2 or 3 minutes before that becomes the topic of conversation. If you're talking to an employer, to a plant manager, to a Chamber of Commerce executive, to a mayor, to a city manager, the conversations in Kansas revolve around this topic plus childcare. Let me ask just a few questions first. In today's high inflation times, do our housing programs take into account those circumstances, or does it become even more difficult to solve housing needs with the ever-increasing costs of materials and rent and the cost of construction? Mr. Battany, I see you were nodding your head with me, so I assume there was an answer there.
Yes, the cost of labor and cost of materials are materially driving up construction prices. One of the solutions that's available in the industry, which is not currently used by USDA and would be one of my recommendations, are manufactured homes. Fannie Mae and Freddie Mac have rolled out new higher standards for homes. The trade institutions call them cross mods. And these are homes that are 2 to 3 bedrooms, 2 bathrooms, 2,000 square feet that are built to the same standards as stick-built, site-built homes. I've personally toured these homes. These homes are indistinguishable. If you walk through a home with a building engineer, you'll have a difficult time to know if it was site-built versus factory-built. The benefit of factory-built is you can build them very quickly. The homes are built in 10 days in a factory in a controlled indoor environment. And the cost of construction is anywhere from 20 to 30% less due to the efficiencies you have building on site and repeating processes. And in many rural areas where workforce housing is a challenge or labor is a challenge, both the cost of labor is a challenge, but also the availability of labor in rural markets, to have a home built in a factory that can then be transported and installed in a couple of months on site. Typically the modules are installed and then the pitched roofs, garages, and porches are built and attached on site. But these homes for many workforce and rural residents could be a very key part to solve both the lack of housing units and the cost of construction.
I thank you for your answer. I wasn't certain, are you saying that there's an impediment toward programs financing allowing that type of factory construction?
Yes, in today's USDA RHS guidelines, there are pilot programs in a few states where this can be done, but as a standard program parameter, only new construction that's being financed at the time can be built, so existing manufactured homes are not eligible for the programs. And so if USDA could align with Fannie Mae and Freddie Mac standards, for example, that would allow more of this housing to flow to this part of the market.
Is there any justification for the position that rural development takes on this topic?
I think this is more of a newer item to hit the market. I don't know there's necessarily a strong argument against it. Historically, some of the older homes didn't appreciate as well because they're not built to the same standards. But if they follow Fannie Mae and Freddie Mac guidelines to the same high standards, then there shouldn't be any issue with respect to the quality of the homes or their value as an investment.
Mr. Battany, you indicated something that caught my attention, and I heard this yesterday from my own rural development director, our state director. it wasn't necessary, well, I don't want to put words in her mouth, but the emphasis was on, we need money, resources, appropriations for staffing, which is different than we need another program, or we need to fund programs higher. I heard that from some of the witnesses today, but the ability for USDA to meet the demands is lacking because lack of people, lack of personnel. Is that a common circumstance, I assume, across the country?
Yes, that's a very widespread feedback from lenders who work with USDA. You know, the teams are wonderful, but they're just spread thin. And a lot of the things they spend time on are manual processes that could be eliminated through technology, and they could better spend their time on being more responsive on communications, responding to emails, being more available for phone calls, and just helping lenders. Because every lender who doesn't get helped is a borrower who's waiting for an answer. So the improved customer service to lenders will flow through to borrowers.
Ms. Plummer, would you tell me something I probably should already know, but what are the Department of Interior BIA programs that are particularly valuable in housing, or does the tribal community rely upon USDA?
Excuse me, I would say the latter. The BIA, I believe they have the home improvement program that's not as broadly used as it could be, and it's largely for restoration. But in terms of encouraging new development and new finance, there are no programs offered by the Bureau of Indian Affairs. And so tribal communities lean into either Section 184 home loans, which historically it's becoming more and more of a conforming product and inaccessible for tribal community. I believe there's 7% of HUD 184 loans that actually are performed on trust lands. And so there needs to be some work on that front. For that reason, more have leaned into USDA and the programs available there and have been creative about things like the relending pilot. So
Thank you very much. Thank you.
Thank you, Senator Moran. Senator Daines, you're recognized for 5 minutes.
Madam Chairman, thank you, as well as to Ranking Member Rounds. And thanks to all our witnesses here today. It is great to have a Montanan with us as well. A special thank you to Ms. Plummer for your willingness to make the journey here and to testify as well. I hear consistently from our first responders, our teachers, other critical workers in Montana that it's almost impossible to find homes to rent, let alone buy, that are safe and, of course, affordable. In the past 2 years, construction times have been protracted by material and worker shortages. This is the business I grew up in. My mom and dad were in the home building business in the Gallatin Valley since the early 1970s. I spent my summers usually working construction, building houses, so we've watched this for a long time. In our tribal communities, it's especially true. We may have as many as 14 people crammed into a single family home. The importance of addressing this shortage cannot be overstated. We're going to have to find solutions to help Montanans house their families as well as their loved ones. As we both know, the cost of construction tends to increase exponentially the further a build site is from materials, from parts, and from labor sources. I've heard in some tribal communities the costs are much, much higher on a per square foot basis than in more urban areas. Home builders have estimated recent lumber price increases alone have added nearly $20,000 to the price of an average home. Ms. Plummer, could you comment on how inflation has affected housing projects in Indian Country?
Sure. Thank you for the question, Senator. And first of all, thank you for recognizing the dire need that we're experiencing in Indian Country. There's no doubt that inflation, I think, has a serious impact on the everyday lives of urban, rural, and Native Americans all over the country. I believe in tribal communities especially, it's felt more broadly on the development side. There are very few homes that exist to finance already. So concentration on the building of housing stock is as important as the concentration on housing finance. That's difficult with a limited increase of cost in goods and materials, but also with a limited task force. So one thing that we've done to help facilitate improving that is work on building a strong Montana Native Homeownership Coalition with membership from our Native CDFIs, banks and credit unions, our TDHEs from every tribal nation across the state to come together around solutions. We've taken some cues from the South Dakota Native Homeownership Coalition and their construction internship program that builds the skills of Native workers in their own home communities, find somebody who can sign off on their journeyman status so that they can retain employment right at home, and then also partners with the Native CDFI to provide financial education so that those new workers understand how to build their business and become self-employed. So we're really looking heavily at facilitating that across the state of Montana.
Plummer, thanks for your insights. I want to note that if you look back at last spring, in the midst of soaring lumber prices and shortages nationwide, lumber prices rose about 100%. They crested in April at 300%. We all saw that dynamic. And by the way, if we look back home in Montana, Ms. Plummer, during that same period, our lumber production in Montana actually decreased by 11%, while costs were soaring by nearly 300% as our national forest failed to meet basic timber harvest targets. I will tell you, as a kid growing up, we had 30 active sawmills in Montana. Today we're down to 6. We could have offset some of these market dynamics had we simply been managing our forests, surrounded by millions of acres of national forest. They get tied up in litigation, and we can't get in there and thin them. Helps in a lot of great environmental wins by doing so, but importantly, keeping lumber prices lower and loggers on the job. A lot of attention has been given to housing pressure in urban communities, but often rural areas and Indian country are overlooked. Smaller communities have fewer workers, they have fewer resources to address their housing needs. As you know personally, we have some first-rate community colleges and vocational schools right there in Montana. And Ms. Plummer, could you share with us how tribal colleges and two-year colleges are critical to developing this pipeline of skilled workers?
Sure. When we started to look at building a coalition, one thing that we did across the state was some asset mapping to determine which communities had a strong tribal college or a community college that we could lean into to access their trades programs, to look at facilitating that construction internship program, and providing employment for those folks that graduate right out of the gate. So they're in every single tribal community across the state of Montana, and just really, we haven't figured out a way to make that happen, but I think there's a lot of potential to make that happen. And
great. Well, the need's not going away, so go forth. Thank you, Ms. Plummer.
Thank you so much, Senator Daines. I believe a member or two is interested in doing a second round of questions, and so we'll proceed with that. I have just one question, and then I believe Senator Moran has a question, maybe Senator Rounds. I want to just dive back into this issue that we are calling decoupling, but it essentially gets at the challenge that we have when these 515 mortgages mature. They go away, and there's a tie between that the rental assistance that can be provided to people and that mortgage. So when the mortgage goes away, the rental assistance goes away. It's sort of like a double whammy of badness for people that are trying to figure out how to stay in an affordable home. Now, there's work being done on this. The president's budget in fiscal 23 suggested that Congress decouple the rental assistance from the Section 515 loans. Work is happening on the Senate Ag Appropriations Committee, and of course the bill that Senator Shaheen and I are working on as well. So could I just like to turn maybe to Ms. Glidden, and then I'd love to hear anyone else's comments. If you could just talk about why this decoupling of these two programs would be beneficial to helping to address one of the challenges that we face in terms of affordable housing in rural communities.
Thank you, Senator Smith. I might just start with saying that we have talked before about the mortgage goes away, and so that is the support to the property for maintaining the rents as affordable. And then when the rental assistance goes away, that is both a loss to the resident, which is the priority, but it also affects the property's ability to maintain as affordable, which also needs to be considered when we have so few affordable properties in many of these rural communities. So with decoupling, this would allow that rental assistance product to remain with the unit, and then it would also help create an opportunity to create conditions that would ensure that that property remains affordable into the future. And I will note that that is something that colleagues at other national organizations have pointed out is very critical to decoupling, from the National Rural Housing Coalition and HAC, that ensuring that there are some conditions around decoupling so that property owners then have those requirements to ensure the property is maintained in safe condition, that there is a restrictive use agreement. So we want to ensure those protections stay in place, but it can be a good way to retain some affordability when otherwise it would be completely possibly gone.
Thank you. Would anyone else like to comment on that? Yeah,
I'll
Ms.
just
Plummer.
add, my experience is more in single-family housing development and finance, and so I cannot speak eloquently to this product, but I do have a co-director, Robin, who's worked quite often with Elizabeth Glidden on this, and I've heard her discuss these issues. I believe that she would support everything that you've said today, and we would welcome the chance to follow up with questions for the record and additional commentary after today.
Thank you very much. I appreciate that, and I'll look forward to, as we continue to work on this and to fine-tune it, we'll be sure to rely on all of your expertise. Thank you very much. Senator Moran.
Chairwoman, thank you. I just didn't want to be remiss. We've been working, Senator Shaheen and I, in our Appropriations Subcommittee in regard to the Department of Commerce and USTR in regard to trade issues, particularly tariffs. And Mr. Batty, you may be the most appropriate to ask this question. We've been trying to get the administration to negotiate a trade agreement with Canada in regard to lumber, and then we have the lingering issue of tariffs on steel. Could you comment on the expense or cost associated with those tariffs and what it means to home building today?
Yes, unquestionably, those increased costs have directly and dramatically increased the cost of home ownerships, and this indirectly also increases rental costs, because with inflation in general materials across the board, but the specific increases in lumber costs in particular, but also in steel and other costs, those components combined with the higher inflation on the labor costs have resulted in much higher cost to construct homes. It also gives incentives for builders to build more higher-end homes and less entry-level homes. And as the costs go up and homes become more unaffordable, at the same time interest rates go up and homes become more unaffordable, a person who was an aspiring home buyer now has to become a renter, and that creates more demand for rental and pushes rent prices higher. So the increased cost of lumber trickles down through the entire ecosystem and impacts both home buyers and renters in terms of higher costs of housing.
Thank you. Thank you.
Thank you so much. And I believe we have no further questions from the members, so I want to thank all of our witnesses for being here today and to providing testimony. Before we close, I would like to ask unanimous consent to enter statements for the record from the National Rural Housing Coalition, the National Housing Law Project, and the Housing Assistance Council, without objection. Without objection, so ordered. For senators who wish to submit questions for the record, those questions are due 1 week from today, which will be Tuesday, September 27th. For our witnesses, you'll have 45 days to respond to any questions for the record. Thank you again for that. Senator Rounds, I think we have lots of very practical, common sense ideas for ways that this program can be improved to work better for rural communities, and I'm excited to work with you on this.
Thank you, Madam Chair, and I would just simply say to our panelists today, thank you very much for a very informative question and answer.
With that, this hearing is adjourned.